All right, all right, all right. Here we go. I see you, Miss Kiki. Let me add Kiki to the skirt stream. There we are. Hey.
Great.
Good
Hey
evening. Good
everyone, how are
evening.
you?
I am good. How are you?
I'm doing great. I'm doing great. Thanks for having me on again. Hey
Very
everyone
welcome.
in the audience.
They're
Are
coming
you guys
in.
happy? They're coming in? All right.
Yeah, they're not.
You guys,
Sometimes it takes a little bit for see, they're just getting a notification now.
gotcha. All right.
Yeah.
So when a couple of them can hop in, let me know. I'll
Okay.
share my screen and start.
Okay.
But I'm happy to be here again, second time for the week. Feeling
Yes.
good.
Yes.
Ready to share this information and help a couple of ladies out.
I'm so excited for this. I'm so excited. Hey Tracy, hey Dion. There also is on your end, if you see like a comment section, you can see, I don't know if like when
I
I
could.
highlight them, you can see their comments. Okay.
Oh wait, their comments. I see it on
Well,
here.
yeah, you can see their comments, right? You have a space
Mm-hmm.
where okay, okay, just
Mm-hmm.
to just so you can see. You can't physically see them, but you will be able to see their comments.
Yeah, I see the
Mm-hmm.
comments.
Yeah.
I see the
Hey, Miss
comments.
Dion. Hey, Dennis.
Hey.
Welcome in. Hi, Shalonda. Hey, sis. Hey, Latanya. See, they coming in.
Yep.
Come on in, y'all. Come on in. We're going to have a little bit of fun. All right. Hey, Kelbo. Hey, Andrea. Hey, Vivian. Hey,
Hey.
we have Miss Kiki here with us again today. Hey, Dawn. Thank y'all for coming back.
I seen a lot of y'all watch the one for Saturday. That was really good. I hope
Yes.
that I help somebody with that.
Yes, you
Even
see
if it's
the
just one
views.
person. Yeah, a lot of people
I
watch
haven't
that.
even begun to share it. I haven't add tags to it yet, so people will search it. They will
Hmm.
continue, to go because I have some older videos that have, they've been on here for a long time though. They have like
Hmm.
14, 15,000 views on them. Over time, the views do go up as people
Yeah.
will search, but you got to add the tags and do all that. I haven't done
Hmm.
all that yet, but
I was
yeah,
like, that's
people.
pretty good. People are,
Mhm.
looking in there. I was like, I hope I, help at least one or two people on there.
Oh
Share it
yeah.
to your family, your pregnant friends. Share it, put it out there. Same thing
Yeah.
you're gonna do with this one.
That's right. And I sometimes I get questions even after the fact. I miss some questions, so I did screenshot a few and then I'll go back like on the next live and like answer them, because
Yep,
sometimes
perfect.
I don't see, everything on the feed. Hey, Miss YouTube on fire, Tandra. Hey, Leslie. Thank y'all for coming in. Hit the like button for me, guys, as you come in. You know that always helps my little algorithm. Hey, Miss LB, Ziltanya, Lawanda. Hey, Love Christy. Thank y'all for coming through. Hey, Lakeisha. So we have Miss Kiki here with us again today. You know that she came on Saturday and shared her birth story with us, which was like such a wonderful live. It was filled with so much information, and she was so willing to share her experience with us. And I really, really appreciate that. This financial information has been like really, really important to me. I've been telling you guys about this from like videos and videos ago, right? So now we have Miss Kiki back and she is going to talk. She's going to take the floor, and talk all about, financial freedom, the financial security. Most of the things she's going to talk about, I'm already vested in. Okay. Because I've
Yep.
been with this company for 9 years now. So, I mean, it's from life insurance, it's from credit, it's from, budgeting, saving, it's 401s, 401ks, IRAs. I mean,
Everything.
everything. Right? So it's a lot of information, guys. You just take it slow. You don't have to dive and feel scared or feel like you have to go foot first into things. She's going to take her time with you, okay, and explain everything to you. Trust me, I didn't get where I am today by not taking heed to what she's saying. You understand what I'm saying? We came from a little tiny little cramped up 2-bedroom apartment to what we have now, and it's only because of the budgeting and the education in which I received. Okay. So
And I've seen your house in pictures. It's beautiful.
thank you.
It is.
Thank you.
It's
It took
nice.
time, girl. We did some things, and fortunately we were able to live off of one income, right? So that was really important. We took a few years and just said, you know what? We're going to act like we didn't even see this money. Just save it, and we tightened up, and we just went with a budget and just lived that way, and it's just what it is. We cut out vacations, we cut out doing the nails, cut out doing the hair, cut out doing, I mean, a lot of things that we would normally do. We made that sacrifice to get this, it just didn't come.
Absolutely.
You know what I mean? But if you want
Absolutely.
something, that's what you have to do. And
Absolutely.
you have to understand too, like if you invest your money the right way, it's flipping it. You know what I
Yep.
mean? It's
Yep.
making it for you the legal way.
Heavy on the legal way.
Exactly, exactly.
So
So, yeah,
thank you, Kiss by the Sun, for for sharing that testimony before I get into it, for sharing your story about how a company helped you and that testimony. That's really great, especially for your followers who trust you. And of course, stand by you to see that they can see that, no matter where you are financially, it doesn't have to be that way. With help, with education, with guidance, you can achieve whatever goal you want, whether it's to buy a new home, whether it's to retire rich, retire comfortable, retire at a certain age, whether it's to buy more property, whether it's to open a business, whatever, you can achieve it. So by you telling your story and showing that, and showing we had to sacrifice, we had to stop spending money. It's like going out to eat, whatever or put a limit
yeah,
on it. Put a limit
right.
on it rather than stop,
Mm-hmm.
right? We had to do that to get to where it just shows that they can do it. So great, guys. So guys, I'm going to share a couple of, just not much, just like about 2 slides with you guys. I'm just going to explain some easy financial concepts. Is one thing, Kids by the Sun can let you know, is that we are very straight to the point and we
Yeah.
make finance easy to understand. I'm not like into the long, going to that. I'm not into that. We make it easy to understand. You're going to get it. Okay.
Mm-hmm.
So, and guys, if you guys have any questions or comments or whatnot, definitely, put it in the chat. I won't be able to see it right then and there, but when I'm done with the slides and I hop back on, I can see it. All right. So great. I'm happy to be here again. All right. So can you guys see my screen? You can see my screen, right?
Yes. Oh, no,
All right.
no.
No, you
Let me
can't.
add it. Okay, I think I
Okay.
have to add it. Add to stream. There we are.
Can you see it now?
Can you guys see okay?
Can they?
They're gonna respond. I can see it good.
Okay. Let me know if they can see it. That's
Yeah.
fine.
Let me check in my phone if I can see. Okay. Dion says yes. I think it's a go.
Perfect.
Yeah.
Perfect.
Mm-hmm.
All right, great. So here's something that we call a
Yes.
financial house, right? So like I said, we make it really simple for you guys. And what is a financial house? A financial house is pretty much the key simple steps needed to have a strong financial background, to have a strong financial program. Because just like, Kids by the Sun, you built your house, you have a house, right? We all know that it starts from a certain, from a certain background. So you got to start at the bottom and work your way to the top. And it's the same thing with finances, right? So the first part to a financial house, a strong financial background, is called income protection. So what is income protection? Income protection, another word for that is life insurance. Why is that so important, right? Because we are tired of people, you don't want to put out GoFundMe's, right? What is life insurance for? It's for if you have responsibility, God forbid something happens to you as the breadwinner, you want to make sure that your children, your grandchildren, your spouse, whoever that whoever your income or being contributes to, have money to live off of when you're
Yes.
here. Why? Because the bills still got to get paid, right? Because you still have debt that's going to be accruing, because your kids still have needs. They still want to go to college. They still want to play soccer, do this and whatnot, because maybe you want to still leave something for your grandchildren or whoever else, whoever you're taking care of. So you want to make sure you have life insurance. And how much life insurance? At least 10 times your income. Why we say 10 times your income? Because at least, at minimum, if you have 10 times your income, that's a good amount. Like your family's able to do something with that. So let's say you make about $50,000 a year. At minimum, someone should have at least $500,000 of life insurance. At minimum, right? And now the thing with that is not everybody. The thing with that, most people in our community, what I've noticed is that when we get life insurance, we tend to have like small policies because we're not educated about it, right? So we tend to have, sometimes policies for like 20,000, 30,000, 50,000, 100,000, and depending on what your situation, that can be good and all, but most people, if you have a family, if you have people you're taking care of, you definitely want to have 10 times your income, just because you can feel confident, that if something happens to me, they're good, right? So what I always say is that we all know our birthday, right? You all know your birthday, but none of us know our death date. Unfortunately, death it just comes randomly sometimes. It just creeps on people, right? So you want to make sure that, God forbid, whether it's tomorrow, God forbid, not going to win, or 50 years from now, you're prepared and your family's prepared. Okay?
Mm-hmm.
So the next thing that we talk about is having an
I'm sorry,
emergency. Go ahead.
Kiki. I just
Yeah.
want to let them know I do have the life insurance that Kiki is going to talk about. I started at 250, right? So the policy I gradually increased over the years to 500. So now me and my husband are at a status where it was affordable for us because we did it in increments. And now, God forbid, should anything happen to us, and I'm telling you, he doesn't even pay $100 a month for this policy, not even
Beautiful.
that much. And he is insured for $500,000 if anything should happen to him. You know what he does for a living. He's a law enforcement officer. Okay. And
Beautiful.
he's insured for $500,000. Okay, guys. So it's not that it's not attainable. It's just that, we need to be more responsible. We would not have to put up a GoFundMe. And our children are a part of the policy without having to pay anything an additional. They became riders. So if God forbid should anything happen to our children, we still can use the policy. So this is really, really important, guys. Okay.
And I love what you said. I love what you said about that. Just to kind of like piggyback, because you pointed out that your husband's a law enforcement officer. So just to hit on that, I'm sure he gets benefits from his job, right? He has life insurance from his job. He gets benefits
Yeah.
from his job. Now, most people think that just because you have life insurance at your job, you're good. But the way that works is you don't own that policy at your job. So the employer can do whatever they want with it.
Yep.
So, it's free, so take it. But when it comes to things that you need for your family, you want to make sure that you have that in your hands. So you want to make sure outside of work, you have a policy that you know for 100% sure, as long as I keep paying my premium, that my family's going to be taken care of. Why? Because it's extremely important. It's the one thing that you can't recover from. Like, God forbid something happened, having life insurance is the one thing that you can't recover from, that your family can't recover from, right? So like me, I'm in my 30s. I've had kids. I've had life insurance since I was in my early 20s. Right. So I currently have $1 million. My husband currently have $1 million. Plus he has a little bit more than me, but I've always had it. And it doesn't matter what's going on in my life. Like, I always make sure that's taken care of, because you just never know. Like, right. So like last week, I told you guys about my birth story. If I had went to the hospital about 10, 15 minutes later, I wouldn't be here today, and my family would have to use that life insurance. Now, God forbid they don't, but it's just things like that. I didn't know that when I went to sleep that night, my life would have been at risk like that the next day. It just, things happen, right? So you just want to be prepared. So great, commentary on that. And the next thing, having an emergency fund, right? So what is an emergency fund? At least 3 to 6 months of your expenses. Why do you want to have that? Because things always happen, right? We can all see how everything is going with how everything went with the pandemic. So many people lost their jobs. Yes, places are hiring now, but a lot of these places, having a job, you definitely want to have a job. You need your job, of course, but you don't want to just depend on living paycheck to paycheck. You want to make sure, God forbid something happened, you can handle it, right? Like, what if your job, God forbid, what if you get fired? You want to make sure that you're at least able to pay 6 months of rent, 6 months of bills and whatnot, because things like that do happen. We think it can't happen to us because maybe it hasn't, but it happens. Like, it happens. You want to make sure you're not stuck. So like, that, and also, so many people, like Americans, especially in our community, because we're not educated, and and because we don't think it can happen to us, we just are not we're not prepared. So a lot of us are struggling in debt, right? So the point of another point of having an emergency fund is because, let's say, you have a car, your car goes out. It's about $500 to fix it. You need new tires, whatever. It happens. I have a car, and I always that's like another child because you always got to do something to your car, right? So let's say something like that happens. You want to make sure that you're able to go into your emergency fund and take care of it. You don't want to go to credit cards, because credit card money is not free, right? Credit card money is there for a reason. And obviously I advise you to use your credit cards if you're using it smart, but it's not there for you to always happen to dip into because you have an emergency. You want to build cash so you can protect yourself from that. Okay. So retirement, the next part of a financial house, right? So the third part of a financial house, retirement. Now, this is a big one because a lot of people in our community, they're retiring broke, unfortunately, right? So like, I don't know if you guys go to Walmart. I go to Walmart often. You see people who like should be home chilling, relaxing, working, and it's sad because they definitely don't want to be there, but they're there because they didn't position themselves like how, like how I did, or how you did, Kids by the Sun, to be able to retire properly, right?
Exactly.
So what are some ways you can retire? Have an IRA, mutual funds, a 401k, right? And of course, your job have 401ks, 403bs, whatever you do, right? They have this information for you. You can set this up with your job. And I 100% want you to, I 100% feel that people should take whatever their job offers. But again, you also want to have something privately because you don't know what it's going to look like at that company for you, or with that company at all. You want to make sure that when it comes to your finances and what you need or what your family need, separately, you have that together. So you don't have to depend on your job, right? So more like, it's time for us to, and to put away something for retirement. It don't have to, of course, the earlier you start, the better, because you have more time to accumulate money, but it don't have to be expensive. You can set up a mutual fund for as little as $50 a month. Everyone can do $50 a month. Now, $50 a month is not going to make you rich, but it's a start. You start with $50 and you go up. That's what I started mine with. I started mine with $50. You start with $50 and you go up as you can. The point is to just start, right? Because you don't want to say, oh yeah, I'm gonna put it off. I'm gonna wait till I get some more money. I'm gonna wait, because you don't know when that time is gonna come. And then you keep saying that, and then things happen, and then it never happens. You want to make sure you just start putting away something for now. Kind of like just setting yourself up, right? Because we all want to live long. We don't want to still be 65, 70, 75, still working. That's not really a life to live, honestly, so retirement. Also, the fourth part is college savings, right? So just setting up money for your kids. Let's say if you have kids, grandkids, whoever whatever child you care about, just putting away money for them. College is extremely expensive. It's going to be even more expensive as our kids get older in a couple of years. It's going to be crazy, right? You don't want your kids going into college into debt. Of course, we can bank on our kids getting scholarships, and we want that. But sometimes, even if your grades are perfect, you're still not going to get the scholarship that you want. It's just how it happens, right? So you want to make sure that you're preparing for that. You're preparing your kids for that. Like I said, it doesn't have to be expensive. You can start with as little as $50 a month, but listen, something is better than nothing. Starting is better than not starting ever at all. Okay? And also, a will, right? So a living will, a power of attorney. Some of us have assets. Some of us has, whatever you have for yourself, whatever you have put together, you want to make sure you protect that, right? You want to make sure you protect that with a will, right? So like if you have kids, right? Do you know who your kids are going to be with? God forbid if something happens to you prematurely, right? If it's not going to be with the other parent, do you have that in writing? Because you don't want them to go through the system. Do you have that in writing? Are you going to you don't want anybody fighting over your kids. You don't want anybody fighting over whatever assets you have left or to go through probate or anything, because you want to make sure you don't want that. Your family don't want to go through that. After losing you or whatnot, they don't want to go through that. Even if you're alive, right? You don't want to go through that. You want to make sure you're good. Also, a healthcare proxy, that's not on there. But, if you have to go through like surgery or anything or whatever you have to go through, you want to make sure you assign somebody, somebody who you know is responsible, who have great intentions for you, who's going to make sure they do what you wish to be done. God forbid, in the event that you can't communicate for yourself. All right. So also debt, right? Debt is a part of putting down your financial house, right? So we have a strategy that we call debt stacking, which is a way to kind of pay down debt sooner than quicker. Because we know debt, what makes debt go up, even debt be so high, right? It's sometimes, most of the time, it's the interest rates, right? So we show you how to pay it down faster, cost efficient, affordable, and efficient, so that you can, cut down on some of that interest, but also you're not paying credit cards for the next 5-10 years. Because we all know, if you pay a credit card, let's say you paid a minimum amount, right? You just paid a minimum amount. Most of the time, the next month, it looks like you didn't pay anything, unfortunately, right? Because sometimes the way people do it, they go about it wrong and they just pay the minimum and that's it. So you're stuck paying that card for months and years to come when it's just a little balance. A lot of times people are paying off the interest off the debt. The interest on the debt is a lot higher than the principal. That's because they're not educated. Right?
Yep.
So this is a couple of parts of the financial house. So what does it say here? So how much can you pay yourself a month? Right? So all it is here is really paying yourself when you think about it. The only thing is that it's places where you can put your money. So a lot of people, after they pay their bills, right? What I've noticed with my clients and stuff is they have money left over, but because they don't have a place to put their money, they pretty much spend it out. Right? So here, what we're showing you is that yes, let's say you have whatever, $100, $250, $500 left over. Put it towards your financial plan, right? Put it towards bettering yourself and your family, right? Put it towards your retirement. Put it towards your emergency fund. Put it towards your life insurance, whatever you do. But just put it towards you. Pay yourself first. We're so used to paying, we're so used to paying other companies and other corporations first, that we don't know how, we don't take care of ourselves first, unfortunately, financially. We pay them, and then whatever we have left over is for us. We don't want to do that, right? So you just want to make sure you have a system for your money to go every single month, right? So another concept is, any questions so far or no on this? Good to go?
Anyone have any questions? Kiki can see your questions too.
No, I can't right now.
No. Oh, yeah, she's on the screen, so I'll highlight it. If you have, someone did have a question. They wanted to know the difference between, let me see the start comments. Can you also explain the difference between term
I knew
life
that
and
was
term
coming.
insurance? Yeah.
That's like one of the most popular questions.
Yeah.
So I knew that was coming. So
Mhm.
here's what I'm going to say, right? You only want to have term insurance. And the reason why, for the average person, it's the best one. It's cost efficient, right? It's effective. It's just straight insurance. God, you have term insurance. God, something happens to you prematurely, you have 500,000 of insurance. Your family's getting that 500,000, right? Just like Kiss by the Sun said, with her, it's affordable. Just like Kiss by the Sun said, her husband is not even paying $100 for $500,000. That's good. That's pretty good, right? What else about term insurance? So here's the thing, right? With whole life insurance, you have an insurance policy and a savings policy. You have an insurance policy and a savings. So it's together. They mix it together. The thing with that is that it's a whole bunch of other things into that. So what do I mean by that? Meaning that what they don't, so let me see if I have now you're gonna let me get into my whole presentation about that. But no worries. Let me see. Hold on. I'm just going to look for something so I can show them exactly what I'm talking about. Okay.
Okay.
Sorry, guys.
Hey, Miss Ask Granny. You
Okay.
can ask the questions, guys, and I'll pin them. I'll like star them for her.
Yeah, you
So
can.
we'll still have the questions for after, okay? Because I just don't want y'all to forget your questions.
Yeah,
So
no,
we'll
just put
put
the
them out there.
questions. Yeah, just put it out there.
I'll
and
scroll.
we'll get it. I'm just looking for this thing right here, and I can't find it. Of course, I can't. So I'll just explain it just like that. It always. I just wanted to show the slide so I can show it like so I can explain it like that so she can get a visual, but I can't find it,
Yes.
so it's fine. So like with whole life, pretty much you have an insurance policy to savings. The problem with that though is it doesn't work exactly how companies say it work. How does it work, right? So you're paying every month for an insurance. Let's say you're paying about $100 a month for your policy, right? Of course, if you're paying that, half should go to your insurance policy and half should go to the savings. The way that works though is that most of the money would go to the insurance policy and a little bit goes to the savings, right? Unfortunately, that's how it works. The way that also, another thing about that, we call it the four evils. So another evil about that is that when you're paying your policy, right? So let's say for the first 3 to 5 years, you're not saving any money. So you can be putting money into that policy and you think, oh yeah, I have money saved. Let me get, whatever, $500 2 years after you don't have any money in there. Why is that? Because the first couple of years, the money that you have in there, that you should have in there, that you're paying the company every month, it goes towards the company. So it goes towards paying the agents, it goes towards administrative costs and etc. So you don't start building money until like about 3 to 5 years. So what people are not realizing is that they're losing money, especially in the beginning from having that policy, right? So another thing is that if you ever want your money, you have to borrow your money. So let's say you have money in there, right? And okay, let's say as time go on, you have a good amount of money. You have $10,000 in there. You go to the company and like, oh yeah, I want my money. I need to do this. I need to put down towards the down payment on a house or whatever. They're gonna tell you, sure, you can have your money, but there's a charge. So it's not free. It's your money, but they're telling you that you got to pay to take it out. So that's crazy. That's like going to the bank and putting your money in there. And they're like, oh, yeah, if you want your money back, here's what you got to pay. Here's the interest you got to pay. If you don't pay, you're not getting it. You would flip because I would flip. Right?
For me, it's
So
not worth it. It's not worth it for me. I've really looked into that. And to me, I didn't like the whole life.
And I'm glad you said that.
Mm-hmm.
And then another thing is that the most important thing is that when you pass away, right, you would think your family would get the insurance and the savings because you have both. But how it works is that they either get one, the insurance policy or the savings. The company don't pay out all. So you're paying for both, but they don't pay out both. And most people are going to pick the insurance because the insurance has more money, losing the savings, unfortunately, right? So that it's just way too complicated. It's a lot of people in our community who have that, they lose money, right? We always recommend term insurance. It's straight insurance. Like there's no cutting corners or anything like that. Just like your car, you got auto insurance. It's term insurance. It's straight insurance. You don't got to guess, so you don't got to, how much you pay a month. You know how much you got covered. Same thing with term insurance. Perfect. Now with our philosophy, right? We recommend having a savings, of course, but the difference with us and the whole life, we split it, right? So we have the insurance, and then we have, you set up your retirement fund or your emergency fund, whatever savings you would tell us you want. You just split it, and then you contribute. You tell us an amount a budget that you have, right? And you just split it and you contribute to both. That way you see a better return on your money. Like his spider son said, it's not worth it, like at all. Right. And the reason why people have that is because one, they had a really good agent sell it to them who's going to make a good commission off of it because they do get paid a lot for that. And two, because they're just not educated on it enough, if that makes sense. Okay. Any other questions so far before I go to the next slide?
Let's see. Sony says, but if you outlive the term on a term life policy, if you die, you get nothing.
So if you outlive it, so if you live to about 95, 100, yes, just like with your auto insurance, if you never get into an accident, right, you get nothing. But you have it because just in case, what if, right?
Yeah.
So now the way you offset that is you have a savings attached to it. So I never recommend my clients to have insurance only, you want to make sure you also have savings. Why? Because people are living longer these days, and you want to make sure you're living longer. You have money to live with, right? So most people, if they don't have a savings plan, if you have a savings plan, you're not going to feel like that. But if you have a savings plan with your insurance, you're going to feel like, oh, I'm just paying it. What if I don't die soon? Which you don't know, but you're going to feel like, well, what if I don't die soon? So you kind of just want to put together a full plan with that so you don't feel that way. So it's not that way, if that makes sense.
Yeah, I felt like I would get more from my 401 and my IRA and my other investments rather than whole life. And whole life was going to cost me triple of what I was paying now. It just
Yep.
didn't make sense to me. You know
Yep.
what I mean? And then I was going to have to pay penalty. I was going to
Yep.
have to pay it what the math wasn't mathing for me. I'm just going to be honest with you. I did my research and you should too. But for me it wasn't working out. I felt like I'm just paying a fraction of what I would pay with whole life. And it was attainable. It was attainable for me. It was better than not having anything. And I was getting a lot more, from the term than I was from the whole.
And it's great you said that, because even like in the whole life policy, right, whatever variation they have, the investments in there grow only like 1 to 3%. You're definitely getting a lot more in your IRAs and your 401k. So it's a
Hmm.
better investment having that separately, right? Because whole life insurance, they sell it as an investment, but it's not an investment, right? So it's really insurance, but they sell it as that, but it's not. Now, an investment or savings or whatever you set up would be like mutual funds, right? IRAs, 401k, whatever you have put together. But and I'm glad you're here. You actually have this for yourself, so you can
Yeah.
say for yourself, like, okay, yeah, it makes no sense.
Yes. Gwen does have a question. She said, my
Yes.
mom passed six
Mm-hmm.
and a half years ago. We found out she had another insurance, and our sister says she doesn't have the policy number. Aflac says we need the social security number and policy number. Any suggestions?
You just need the social. Why do you need the policy number?
Right.
You just need the social. And especially if you're her daughter, you have proof of that, birth certificate, whatnot. You just need the social.
Yeah.
You shouldn't need both. Sometimes these companies would do that just because they don't want to pay out,
Yeah.
especially because it's been a while. But you just need the social. You don't need the policy number. With any company, if you want to know about your policy or whatnot, you just call the company and just give them the social, and they'll definitely reach out. But like if you have the death certificate, if you have proof that she's your mom, the social or
Mm-hmm.
whatnot, you should
Mm-hmm.
be good. You don't need the policy number.
Yeah.
They're not. Yeah. No.
Next to kin. Yeah.
Yeah.
Mm-hmm. Because I've even had to, I'm going to tell you, just personal, I had an ex boyfriend. I don't understand why he never changed me off of his policy.
Mm-hmm.
But he passed away and it was a work policy. He didn't change me off and they got in contact with me. You know
Yeah.
what I mean?
Mm-hmm.
That ding ding.
Well, don't question. Don't question.
Listen, it is what it is.
I was gonna say don't question
But
blessings, but I was like, whoa.
they should get in contact. They're supposed to get in contact with who's ever the beneficiary or the next of kin.
Yeah.
So,
Mm-hmm. Any other questions? Or good?
um, okay, Brooklyn. If you get sick and miss payments, they cancel your life insurance no matter how long you have been paying. Right?
No. So with other companies, maybe, but with our company, no. We have something to protect against that. It's called a waiver of premium, right? So you can protect yourself. Let's say if you get sick or you get disabled or anything like that. So it's something
Okay,
we'll talk. Yeah, it's something we'll talk about.
that's good to know.
Yeah,
Hmm.
definitely.
Yeah. So you won't lose out, especially if I guess
Because
if you
things
don't have a
happen,
long term.
with life. You
Hmm.
get disabled, you stop working because of a health issue or whatnot. We want to make sure you're still covered. So that's also an option as well. Yes, if you want that.
Yes.
Yep. Any other questions? Or we good to go?
Are we good, guys?
All
Does
right.
anybody have anything they want to talk about right now? You can. I'm gonna continue to star them.
Yeah. Okay,
Mm-hmm.
perfect. So
Yeah.
here's another slide, right? So the last slide we're going to talk about, it's just something we call pay yourself first, right? So remember when I spoke about up here, like, setting up like your emergency fund, your retirement, just like your savings and investment accounts, we call it pay yourself fund. So we believe in having three fundamental accounts. The first one is your emergency fund, which I spoke about, right? So this is like for emergencies. Let's say you have a medical expense. This is money you'll need in about 2 years. So from now to 2 years from now, emergency money, right? So you want to have it. It says 3 months here,
Yes.
but in today's economy, at least 6 months, right?
Mm-hmm.
Of emergency money. Then the next one is short-term account. So this is like a midterm account. So let's say, you know what, you have a goal to buy a house in the next 5 years or the next 4 years, maybe to open a business, and you're gonna need money and you don't want to take out a loan. This account is where that money will come from. Right? So let's say the other one is wealth building account. So this account is your long-term money, right? So your Roth IRA, traditional IRA, whatever it is, your 401k, this is where your long-term money would be on, right? So these are the three accounts. And this is, some people have all of them. Some people only have two. Some people only have one. It really just depends on the person and what their goal is, right? So what I always say is everyone should have at least an emergency fund and at least in long-term account, right? Because one, we all want to get old, and we all want to have money when we're old, right? And we're, retired and etc. And we all want to have an emergency account so we're not dipping in credit cards, and we're not, I see, like, going crazy when an emergency happened, right? Unfortunately. So here is pretty much how your money should be allocated, right? So let's say someone had all three of these accounts, right? So the way it should be is 50% of whatever budget you have should go to your emergency fund. 25% of whatever budget you have should go to your short-term, your midterm account, and 25% should go to your retirement and whatnot. So this is just like an average, right? Of course, when I sit with someone, it's a little bit different. It depends on what their goal is and where they are in their life, but this is just like an overall picture. Okay, so here's the last slide, right? So most people, they don't plan to fail, they fail to plan. What does that mean, right? Most people, they unfortunately don't plan. We don't plan on, passing away soon and leaving our kids anything. We don't plan on, retiring and not having any money to live off or anything like that. But unfortunately, that happens because we don't plan when we're healthy and we're able, and when we're, able to and whatnot. We think that we have time, unfortunately. But, life goes by so fast. We realize we don't have time. And one day you're, however old, you realize, whoa, I am going crazy right now because I did not properly plan. So the reason why, Kids Madison wanted me to come and talk to you guys, because of course, all this information is great, but it's even better when you take action. So it's like, and I went through a couple of things, but here's what I always tell people. You don't have to do everything at one time. Don't drive yourself crazy doing everything at one time. What you want to do is start with one or two things. Start with two things that you want to do better at financially this year, and start there. It's the perfect time now. It's January, the beginning of the year, right? So it's the perfect time to, change whatever financial goals you have. Take two things. You don't have to do all 5 of them this year. I recommend you not. Take two things you want to do, get better at, and start them and continue them throughout the year, and you'll see how good you feel by the end of the year, right? So the great thing about with us is that pretty much everything that I just showed about, like it shows right here, mortgage, credit cards, loans, mutual funds, savings, 401ks, life insurance, I do that, right? Every single thing there, pretty much do that. So like, most people, they have financial products at different companies. And sometimes that's a little bit of a headache. You're like, oh my God, every month I got to deal with this company. I got to deal with that company. I got to deal with this company. At least with us, that, every month, what I have my financial products with one company, one person, I know exactly what's going on. You're not confused, especially when now starting out. Right? So that's the problem. Now, the solution is something that we offer. It's called the financial needs analysis. And I'm sure Kiss by the Sun Note can tell you about her experience with this, right? So it's a customized, it caters to you and what you have. It's confidential and it's complimentary. So it's like a financial GPS that helps you achieve your goals and dreams. So what is it? Based on, whatever your income and whatever your goals are and your expenses and whatnot, what I do is I put together a complimentary plan for you. And then, when we get to this one by one, put it in a complimentary plan, And what happens is it'll come up with a plan and a solution for you. So whatever you say your goal is, let's say you want to retire in 15 years. All right, well, here's how you can retire in 15 years. That's what the FNA does. So it takes all the guesswork out of it. You don't got to guess and be like, whoa, how do I do this? No, it shows you exactly how to do it. And once you follow
Exactly.
the steps, you're good to go. Okay. So like
Yeah.
what I want you to do is kind of like share your experience with having an FNA, because I know you've done some great stuff with yourself and whatnot, like you bought your house. It's beautiful.
Yeah.
What's your experience with having, the FNA done?
Well, it is like having a mirror, and being able to see your projections. You're able to actually see what's attainable, what's affordable for you, like setting out your budget, it's it's really exclusive to you, right? So it doesn't mean that my budget is your budget. It's catered directly to you. So you go with what you can actually afford and how you
Yes.
can attain this, what your goals are, and if it takes a year, if it takes 2 years, it
Yeah.
might take some people 6 months, right? For us, it took a couple of years, because we had to save. We had to get some credit in order.
Yep.
We didn't have our credit together. I'm going to tell you that. So we had to get our credit in order. We already had 403. He has four. I have 403 because I was with the hospital. He has 401. But it was other things like IRAs and Roths and different things that we needed to get in place and get in order to flip the money, to get the money flow a little bit faster. And this way, it was more attainable. The goal was more attainable, and it really didn't set us back as much, because you have to also understand a lot of this money that you putting in, it's not taxable right now, right? So you're paying yourself instead of the government,
Mm.
guys. With a lot of this information, you got to look at it that way. It appears that you're making less than you actually are, but it's in your bank account, and you can take from it when you're buying a house and not have to penalize.
Yep.
Ding ding ding
Yep.
ding
Yep.
ding
Yep.
ding
Yep.
ding ding ding
That's one
ding
of the
ding
five
ding.
things. Yep. Yep.
You don't get to be penalized, because otherwise you have to pay 20% tax on that money. But if you're buying a house, guess what? You're not penalized for that
If you're a first time
money.
home buyer, yep. Yep. And that's
Yep.
what you
And
did.
we were. Exactly. So you have to know this information. It's not that they deliver this in school. You got to figure this out. This is why I wanted to have this platform to bring y'all this, because you have no idea. It wasn't so easy for us to attain what we had to attain. We had to really like get the information. I went to different workshops. I got different information. I signed up for this. I got the information from this company. I dipped and dabbed in stuff, you know what I mean? But you just got to be a little bit more open to do that, and figure out how you're going to set that budget to make it do what it do. It's up to you, you know.
And speaking of budget, the thing is financial education. What we do, we cater to middle income families, right?
Hmm.
So people who are, either now we cater to middle income people who are now starting out and looking to do
Hmm.
better. People who are okay with where they're at, but they're like, you know what, I can improve on some things. And even people who have what they even people who have their stuff together, who already maybe have a retirement account or whatnot. Maybe you might want somebody to look at that and be like, make sure you're maximizing everything that you can, right? So most other like if you go to like Chase, I don't know if you guys know Chase or wherever you're at, Chase
Yeah,
or whatnot, they only deal with people who are rich, right? Unfortunately. So
yeah.
it hurts a lot of us in our community because many of us are not there yet,
Hmm.
right?
Banks are very hurtful.
Yeah.
I went
Yeah.
through a mortgage lender, like a mortgage company, because banks really are,
Mm.
they're, they're not easy. You know what I mean? So,
and
yeah.
if, and we what we do is we help people who are just who's like I said, who's just looking to for help, who just looking to um do better, right? So
Yeah.
middle income families, people who make a certain amount of money, who live in an average life, because even the average person deserves to have financial education and deserves to
Yeah.
retire at minimum comfortably.
Yeah.
So they don't have to go back to work when they're 70 years old. They deserve a good amount of life insurance so that their family can be taken care of when they're not here, right? They
Yeah.
deserve that.
Yeah.
So that's who we look to help, and that's one of the plus about working with us is that we are we are here to help. Like I said, we look to help the middle income family. That's one of the pluses
Hmm.
of working with us. But also we don't go off of a certain, like, you tell us what your budget is and we'll work with that. Of
Yep.
course, because everybody starts somewhere. Some people only have $100 to spare a month, whatever. Some people only have $300. Some people only have, some people have 500. Some people have 1,000. It doesn't
Yeah.
matter what your budget is. You let us know. We'll find something to work with you. And as time goes on, it'll increase, right? So the point, like Kiss by the Sun was saying, is to start somewhere. You don't have to
Yeah.
think, oh my God, I don't have $500 to start now. What am I going to do? You don't need that, right? You just
Hmm.
need to start
Yeah.
somewhere. You just need to get somewhere, and you just need
Yep.
to go on, because your situation a year, 2 years from now can look totally different. And at
Yep.
least you'll feel good that, okay, you know what? Last year I started my Roth, I started my IRA, I started
Yep.
my I have my life insurance, right? I'm good.
Yeah.
And the thing with life insurance, what I always tell people to start sooner than later, is because to get a life insurance with a good company, to get a substantial amount of life insurance, it depends on
Hmm.
age and your health.
Yep. Ding, ding,
So
ding, ding, ding.
people
That made
always,
a difference because I'm just going to say to you, I pay more for my policy. I'm 5 years older than my husband, guys. So I pay over the $100. Okay. Because my husband was under a certain age when we started, he pays way less than me. So the age does make a difference, and we have the same policy. That's what's crazy. You know what I mean? But it really, really factors on your age. Okay, so the sooner you can get started with it, the better. You understand what I'm saying? I mean, for me, we started out with and guys, I don't get anything for this. I want you to see where my life is and where I came from to where how I was able the order of my steps. Okay, so I'm not selling you anything.
yeah,
Kiki is doing
absolutely not.
business with you today. Okay, but we started out with just the life insurance part of it, okay? And then we built our way up through the other things that the company, had to offer, okay? So you don't have to like, oh my God, I can't. You start out where you fit in. You get in where you fit in, a little at a time. You make your baby steps. But even if you can't utilize this, pass it on to your family members. Like, this really needs to be a conversation to be spoken of. If you really want to be able to get somewhere and to do what you need to do, this is how it's done.
And I'm glad you said that, because even with me, I started with the life insurance. So I'm 32. But when I first got life insurance, I was like 22. So it's been like 10 years. Now I have 4 children now, but back then I just had 2 kids. So I started and I was broken and broke.
Yeah. Yep.
So I
Yep.
just started with that. So at that time I got it young. So I had like 350
Yes.
in coverage, and I was paying like $50 a month for me
Yeah.
and my 2 kids. Right. Of course, as time went on, I had more kids, my policy increased and whatnot. But just start where you were. I was a young single mom, and I was just like, you know what? I just want to make sure because I didn't grow up with this information. So once I actually knew what life insurance was, I was like, you know what? I don't have much money. I really didn't. But I was like, as a mom, as a young single mom, and having 2 young children, I was just like, you know what? Let me make sure I have this together, so
Yes.
that, God forbid something happened to me. No, I didn't plan on dying soon. I was young. Like most young people think they're not going to die, right?
Right.
Anytime soon. But I was
Yeah.
just like, you know what? Let me make sure I get this together. And for the most part, I've always kept my
Yeah.
policy on for the most part, because I
Yeah.
understand the importance of it, right? So
Hmm.
let's
Look at
look
all
at,
the young people that died during the pandemic, guys, that
yeah.
didn't think that they were going to die, right? They
You
said the
know what?
pandemic. Hmm.
Let's talk. I don't know if you guys know, but I had posted this on my Facebook last, like a couple of, I think it was last week. But the rapper that died, the
Hmm.
PNB, whatever his name was, right? So he recently passed. He was young, right? He was young. He recently passed, and he had a child and a girlfriend, and no life insurance. So she was saying, she did a whole video how she got to figure it out. She's not the type to help anyone. She's not the type to ask anyone for help. She's not the type to look for handouts, but she's going to figure it out and why not. But it's just so sad because he's a rapper, he's known, but now his girlfriend and his daughter have to start over.
Yeah.
So a lot of them live the glamorous lifestyle,
Yeah.
but behind bars, they're not glamorous at all. They're struggling.
No.
They pass away, and then their family and everybody else is seeing, oh wow, they really didn't have their stuff together.
Yeah.
They really didn't have things set up. So, just that's why we're passing down this information. Like I said, a lot of people don't know it. I didn't know this information growing up. I didn't learn until I was an adult, unfortunately.
Yep.
So, and that's what I'm doing something with my kids, right? I'm teaching them this information while they're young so they can just have a better head start in life. Like they don't have to make the same stupid mistakes I made and whatnot financially. So, if you guys have any questions, wait, did you? So there's another question. Yes, but term changes, right? So what do you mean by changes? So with our company term, if you're out of New York City, you can have it up to 100, up to age 100. Most people are not living past 100.
Yeah.
So you can have it up to age 100. Now, what do you mean it changes? Initially, you have an initial term for 35 years with us. Other companies, not every company is like that, but with us, initially 35 years. If you're in the New York area like I am, it's 30 years. But let's say you're not, it's 35 years. After that 35 years, you can always extend your term. So you can always extend your term and keep extending it until you reach age 100 or 95 and whatnot. Now, with insurance, let's say you're a family, right? You're a person, you have a family and whatnot. You have $500,000 for 30 years, right? Let's say you have $500,000 for 30 years and whatnot. You have that amount. Now, let's say 30 years from now, you're paying $100 or whatever, just hypothetically. You have that amount. Now, 30 years from now, are you going to need $500,000?
No, because your kids will be grown.
Your kids will be grown. You're probably paid off most of your debt, hopefully, right? You have retirement money. You're not going to need $500,000. You're probably going to need like a little bit, maybe of insurance. Maybe if you want to leave something away for your grandkids or your kids or whatnot, but you're not going to need all of that. So yes, it changes over time and whatnot. It changes over time in that way, right? So you can still have it for the rest of your life, but depending on where you at, the term, it can't change or whatnot. All right. Did I answer your question or no?
For me, it was most important to have that amount set while my children were young, so that they would be okay if anything happened to me and my husband. It was just important that they were going to be okay. Like we would been able to pay off our debts, and our children were going to be financially secure.
Yes. So let's say when your term life is a 10,000, when you die, you would get the full 10,000. Yes, you absolutely would.
That's what Brooklyn says. She didn't understand that part.
What part?
I guess with the term with the term of how it changes, Brooklyn. Hey Sharon, welcome in, sis. It gets less as you get older.
No, so it doesn't have to. It doesn't have to. But what I'm saying is, like the way life works is that when you're younger, of course, and you have a family, you have debt and whatnot, you need a lot of insurance, right? Because you still have things you need to be taken care of and whatnot. Now, as you get older, let's say you have insurance a certain amount. Let's say you have $500,000 insurance for 30 years. Now, after that 30 years, you might not need $500,000. You shouldn't need $500,000 of insurance. If you've been working with a great financial advisor who know what they're doing, you shouldn't, right? You shouldn't need that much. Why? Because your kids are older, they're grown, you're not taking care of them anymore like that. You shouldn't have much debt and whatnot. So you shouldn't need that much. Now, if you want to keep $500,000, go right ahead. For the new term, go right ahead, right? However, you shouldn't need it. It should be a choice. Right now, you need it. That's why you have $500,000. I need all my insurance. I'm young, right? My kids, I have young kids. So
meaning you could lower your policy and pay less.
Yes, if you want to.
You can pay less.
It's a choice. So it's not like something that, I have
I'd
to.
rather use my money for something that I need right now that's attainable. To me, that made better sense. I don't know. For some people do like whole life. They feel that they can get back something if they need it, but I didn't see the benefit when I was doing the math. To me, I just didn't see the benefit. I found that I can put my money into something else and let it accumulate and work for me now, and not have to deal with all that different issue if I needed to get to my money.
Exactly. Right. You don't want to
Hmm.
have to pay any penalties and surrender charges, and
Hmm.
it's just too
I didn't
much for
have to
your
pay
money.
those penalties to get to my money to buy this house, is what I'm trying to explain to you.
And that's
But
the
if
and
I
that's
went
the
into my life insurance, like I would have had to pay all that, right?
and that's the thing. Like things happen, but with a mutual fund, I say
Hmm.
you like you can attest to this because you did it. Right. You get a mutual fund or whether with our company or IRA and whatnot, you can just let your advisor know, of course. So you can let your advisor know, but you can get it's your money. Like we don't hold on to your money. We can't hold on to your money.
Yeah.
It's your money. So if you want your money, you just be like, whoever your thing is, I want my money for whatever da da da. We explain to you if it's a big amount, what are the what would happen depending on what the reason is, and that's it. You get your money in about, usually it's about within 3 days, 3 business days.
Right.
Sometimes it's shorter. Sometimes it's a little bit longer, maybe 7, but up to 7. But within 3 business days, you get your money, right? So there's no charges. There's no, surrender charge. There's no all of that, right?
Hmm.
So PFS Investments, Primerica. Have you heard of us? Do you? Oh, Brooklyn Queen. Do you live in New York?
She does.
She does. Oh, New York in the house.
Yeah. Hey.
I'm in Queens.
Kiki's in Queens, guys. I'm New York City all day, even though I live upstate now, but I'm New York City all day.
Right from the boogie down Bronx. Right,
That's
definitely New
right.
York.
That's right. Jay Gill says, I have traditional Roth and TSP similar to 401 via employer. I contribute 5% to Roth and 15% to TSP, but I'm considering maxing since I am 4.5 years from retirement.
That's a good consideration. What I would say is being that where things like that, I don't like to like talk broad. I usually when I give advice on that, because it's like
Yeah.
I like to sit down with somebody, actually see what they have going on, and then I can let you know exactly. You know what, this makes sense.
Yeah.
This makes sense. This doesn't make sense. So I'm
That's
not
from a
gonna give
different company, right?
yeah,
Hmm.
I'm not going to give you a broad answer, right?
Yeah.
I'm not going to be like, yeah, that makes sense. What I usually do is sit down with somebody and, if it makes sense, I'll let you know based on exactly what your situation is and where you're at, because you're saying that, but I don't know exactly what your whole situation is,
Yeah.
right? So, and that's what I do. Like, I have to know your whole situation before I give you an
Yeah.
answer based on your situation. All right.
And just because you're in with your job, you can still get your separate investments going on, right? It doesn't have to only be because, I facilitated something with my employer, right? But when I left that employment, the insurance left, right? And so did my IRA and my 403. I had to do it all over again on my own, right? So you could always do that, you know, on your own as well. It doesn't only have to be with your job.
Yeah, and you definitely want to, because even with the and like you said, when you leave that as well. Like in today's
Yeah.
economy, most people are not staying at their job until retirement. You're going to
Right.
be job hopping at some point, right, for better opportunity and whatnot. So you want to make
Hmm.
sure whenever your job hopping, you don't got to start over every
No.
single time.
Yeah.
You have whatever money you have at your other job. You might want to roll that over to your new 401k, or
Roll it
maybe
over.
your
Hmm.
personal IRA, whatever. But you want to make sure that you have that set up. You want to make sure you have something on the side set up for yourself, right? You want to have it private. Like you said, you had all of that when you was at your job.
Yeah.
And your husband, law enforcement, everybody know
Yeah.
law enforcement got benefits, but he made sure
Yeah.
he got his stuff on the side. He didn't
Yeah.
wait just for his job. And
Yes.
he made sure like, no,
That's
we got to
right.
get this set up.
We don't even touch whatever it's in with the job. We just, because that's retirement. You know what I
Yep.
mean? We play around with the other stuff
Yep.
that we do separately. You
Yep.
see? So Sonia says, Kissed by the Sun, that house of yours makes living
Isn't
upstate
it
worth
beautiful?
it.
When
It
I
does.
seen those pictures, I was like, oh my God.
It's big. It's big. It's a lot. Yeah.
It
So,
is.
to me, the to have the generational wealth was more important to me than anything else, right? Because not only were we able to do this during the pandemic, right, which is huge, right?
Yeah.
Our children have land, so that this is for you, this is for them for years to come. We plan to pay this off before we
Beautiful.
get into retirement, okay, so that they can have this. That's the goal, that's the plan. I'm speaking it into fruition.
This that's amazing.
We saved
That's
enough to
amazing.
get started, to get into that zone, and we're going to keep it there, you know what I mean, and just going to continue to move up. It's just that, and when I tell you, okay, when I got with my husband, all right, he was making maybe, I don't know. It was way less than what I was making at the time, right? However, he built himself up. He went in and did what he did and got another job, and so forth and so forth. So we continued to build ourselves up, and little at a time, built into the savings, and said that this is what we were going to do, and just stay committed with it. You just stay committed, stay to your plan, stick to your plan, set that goal, and like just little at a time. You just have to allow yourself time to be able to do it.
Yeah. Just do a little at a time. Like you said, take
Yeah.
one or two things that you guys, you have
Mm-hmm.
a financial goal. One or two
Not
things from that.
overnight.
It's not. It's not. If you're
No.
expecting that, it's just not
It
gonna
takes
happen.
years for to attain it, right?
But you
But
just
you
have
can
to. You
attain
just
it.
have to start, right?
Mm-hmm. You
Start
have to
somewhere.
start. We finally made the start, and I'm so grateful that some of my coworkers, because those are the original people, right? Remember the guy that I showed you, whom I love so much, that he passed away. This is how Kiki came in to be able to take over for him, right? So they started me, and I didn't know how we was going to start this, because I'm telling you, our budget was small, okay, but somehow we figured it out, and we made the sacrifices, and we just said, this is it, we got to start, we got to do something, just start me off with the lowest thing you have, and then we just started to build up. Every time I got a raise, I act like I didn't even get the raise. I will put the 4% into whatever I was investing in. Whatever, if money came through, if I got a bonus, if I got the, just act like you didn't get it, because you were already doing what you were doing without it anyway. You know what I mean?
Exactly.
So that's how I was
Exactly.
able to do what I did.
Exactly. Absolutely. Does
Yeah.
anybody else have any other questions or comments that they want to um put in?
Hey, Candy. You could always go back and hit the replay, guys. And also, I pinned the form on the live. Kiki also is going to be doing
So
a
yeah, so
raffle.
I'll tell them. I'll tell them. But
Hmm.
so like,
Yes.
so guys,
Okay.
here's the exciting part, right? So, I have two things, right? Did you put the site up too?
Well, I pinned the free raffle, so that's the form, right? Where you can
Okay.
be able to contact them. Okay.
Yeah. So the form, here's one. So I put up a form, right? So I created a form. So what I wanted to do is the second time meeting with you guys, and hopefully not the last time, right? We can do this another
Yes.
time, whenever. Um, but what I wanted to do for you, lovely ladies, is just do a raffle, right? So I set up a form for a raffle. All you have to do is fill it out and complete, and just let me know exactly what you learned today and whatnot, or what got you interested or whatnot. So I know exactly how I'm helping people. The prize is free spa day, free spa day in your city. So whatever city you are, I will pay for a free spa day wherever you are, so you can enjoy the day. I know many of us need that.
Hello,
We are overwhelmed,
ladies.
overworked, tired,
Can I
and
fill
we
it out?
need
Can I fill it out? No, I won't fill it out. I promise I won't fill it out.
and we need a day to just relax, right? So guys, ladies, do yourself a favor, right?
It's an
In
incentive, guys.
yes,
When I do lives, okay, I just want y'all to know I'm about giving back also. And I
yep,
always want to make sure that I have an incentive for y'all. You know
yep,
what I'm saying? You just have to support it. You just have to listen. And even you still get a takeaway, right? You always get a takeaway. Miss Kiki was so wonderful to be able to offer. We're not asking y'all we're not putting up a cash app for her and asking to pay our guests. She She's
Oh, we don't
giving
do
you.
that. I don't do that.
No, we don't do that here. She's
No.
giving you all of this for free. Okay? This is all free financial information she's giving you. Plus, she's offering you a
The
free.
only thing that I ask you guys is
Yeah.
to take advantage of the information, right? So,
Yeah.
of course, Kiss by the Sun knows how to reach out to me. So I have a site as well. What I will do, I'll send it to her, and then
Send
what
it to
she
me
can
and I'll
do.
pin it.
Yeah, what she can do is just pin it. And
Mhm.
you guys want to chat, definitely, especially about like retirement, etc. Definitely set a time where we can meet, where you can talk, just whatever, 15, 20, 30 minutes. We can talk and, just let me know exactly where you are, what you're trying to do and whatnot. And I'll help you guys get started. I'll help you
Yes.
guys get the ball rolling. Wherever you are on your journey, trust me, I can help. Right? So
Yeah.
definitely fill out that for the raffle. I want to treat somebody. So
Oh,
what
that's
I'm
so
gonna do
sweet.
is this weekend I'm gonna go through the raffle. I'm gonna go through it, and by Monday I will give you a call.
Oh.
So
And
I
this is a
wanna.
new mama that should be going to the spa herself, y'all. And she getting ready to treat one of my people over here. So y'all better pull up.
Right? So fill it out. The more
Yes.
forms, the better. And I just want to treat
Yeah.
somebody. All right. And of course, I'll send her the link for my site. And you guys want to chat, schedule a time to speak with me. All right.
Yes. It's
So,
a
like I said,
giveaway. It's a
it's a
giveaway,
giveaway.
y'all.
So, like
It's
I
a
said,
giveaway.
all this information is great, but the only way we can make this information greater is you guys take action. So let's take
Yeah.
action on that raffle and take action on that on my site, right? Schedule a time to
Yeah.
speak with me one-on-one. All right, you guys. Any
Thank
questions,
you so much.
comments? No?
Let me look at the star just to see if I didn't miss something that you might have not already answered. I know Sharon said, I know term is cheaper, but it changed around. Okay, you did
I think I
answer that.
answered that.
What are your thoughts on riders? Okay, Sony did ask this. If you want to go
Okay.
over that.
What are your thoughts on riders to pay off your car and home in the event of debt? What do you mean by that? Your thoughts on riders?
Because riders usually are for other family members, aren't they?
It is, or it can be a part of
Mhm.
that you add on to your policy. So it's
Oh,
an extra
okay.
part of your policy.
Sony, are you still here with us?
Nope.
Just need to elaborate on it. So, anybody else have any more questions before Miss Kiki leaves?
That's fine. We will I look forward to speaking with you guys. Like I
Yeah,
said, one on one, definitely reach out. And a raffle. I look forward to calling somebody as
yeah,
a winner and just letting them know, you know what? Here you go. Right? So
yes.
definitely you guys, it was a pleasure meeting with you guys again. Hopefully this won't be the
Oh,
last time.
hold on. Sony's still here. I wanted to know if you thought they are worth buying. If you thought that they were worth paying off, then I guess.
Oh,
Sony.
okay. If it's worth it to have a ride on your policy for the most,
Yeah.
is that what you mean?
For a
It
house
depends.
or a car.
It it depends on what the policy is for. So it
hmm
depends on. So with riders, it's an addition to your policy. So you can have your kids on as a rider. You can have your spouse on as a rider. Maybe you can have another benefit to the policy as a rider. So for that, it depends on what it's for. For that, yes, it's worth it. If you just want straight insurance and you don't want anything extra, then no, it's not.
And again, depending on cost, because
Yes,
everything is dependent on your budget, what you could afford,
yes.
what the cost
What
may
the
be,
cost is,
right?
definitely.
For the children,
Definitely.
it didn't cost me anything additional.
You only pay it costs nothing. You only pay for one
Yep.
and the rest are free. So you can have up to 12 kids
Yep.
with our policies and 11 of them is free. You're only paying for
Yep.
one.
Yep.
And one is no more than I think $25 for one.
Yeah, that's all it
So
was.
it's
And I have both of them on mine. So if anything should happen to me, not only am I covered, but my children are also covered too.
and it's only that amount if you have like, maybe $50,000 for them. If you have like 10,000, it's like $6. So
Yeah.
imagine that you're paying $6 for one child, the rest are free, and God forbid if something happened to your kids, they're all covered for free. Like,
Mm-hmm.
doesn't get any better.
Yep. We got them all three on there.
Perfect. It doesn't get any better than that, right?
It
So
was
guys,
perfect.
I love being here. Like I said, definitely do fill out. Thank you. Thank you so much, Tracy.
Yeah.
Definitely fill out for the raffle. I want to treat somebody. And okay, why do they push writer instead of letting the children have their own? So here's why. Children are not breadwinners. So life insurance is for the breadwinner, right? Life insurance is for the breadwinner. God forbid something happened to the breadwinner, they should have the money to take care of their family. Children are not breadwinners. You don't need 500,000, $1 million,
No.
200,000 on your child. It's kind of like they're not bringing in any money. You just need
Mm-mm.
enough money. God forbid if something happens to them,
To
you're
bury
able
them.
to bury them and have a ceremony
Yeah.
and whatnot. Knocking on wood. But you don't need a lot of insurance for your child. You're not trying to come up on your child.
No.
Right?
No.
You don't definitely don't want to do that.
And I mean, what I have for my kid, $25,000. That's a lot. You know what I
Yeah.
mean? I mean, honestly, I feel that that would have sustained a few months of not having to go to work, and it would pay for services and what I would need, right? So to me, and for me not have to pay much of anything, to have all three of my kids on there, it was attainable for me.
And
It
it's
was
also like a
attainable.
waste of money for them to have their own, because while you're paying however much you're paying, $50 a month
Hmm.
for their own, whatever, how much you're paying, you can put them on your policy as a rider. They
Yeah.
have their own coverage. You're paying little to nothing. And that extra money that you're using for them, you could be investing that money for yourself
Yeah.
or putting it towards their college
Yeah.
education, which they're actually going to use if they,
Yeah.
or an investment towards for them or whatnot if they don't go to college. So it's
Yeah.
just,
Yeah.
it's not, it doesn't make financial sense. And it's no
When they
reason to
become an
have,
adult, they can
yeah,
start looking into getting their own policies. But when they're babies, when they're children coming up, they don't need to have those big policies. It just doesn't
it's,
make sense. It doesn't.
yeah, yeah, exactly.
Hmm.
Yeah.
Yeah.
Oh, I'm sorry to hear that. I just buried my nephew with no insurance.
Oh, I'm sorry,
Oh, I'm
Brittany.
sorry to hear that. Yeah, it's definitely expensive. We recommend having something. I'm not saying don't have
Yes.
nothing, but they don't need their own
Yeah.
policy. I have four and they don't have their own. They don't need it.
No, no.
Oh,
I'm glad that I
I
have
look
them as
forward to
writers.
chatting with you as well.
Yes.
I'm gonna text you right now the link so you can just put it in.
Okay.
All right.
All
All
right.
right.
Thank you, Kiki.
You're
Once
welcome.
again, and also, how is baby? How are you and baby? Just checking in.
He's, you know what? It's. I was gonna text you yesterday and ask you. I think
Yeah.
I had mastitis the last couple of days. I've been in so
Really?
much pain.
Uh
I had a fever
oh.
and everything. I was just like,
Do you
and
have
I
redness or any swelling or
I
redness
didn't. It was
on
a
the
little
breast?
red right here, but it's kind of going down. It's a little red on the right side, and it's kind of going down a
Did
little bit.
you did you in the shower, hot shower, right? And you squeezed out
And I
some?
squeezed it. It hurt to like pump. It hurt to do everything. I was like, oh my
Okay.
god! And it was like when I first got it, it was like 9 o'clock at night. I was like, I can't text it this late. And
No,
then it
no,
got.
text me. I'm up late. Text me. You get in the hot shower right away. And as long as you have fever?
It went up to 102 last night. So I had the fever, the chills, and then it kind of like went back down a little bit today. But last night, yeah, I had the fever, the
You don't
chills.
see any more redness at all? Is it
I gotta look. It's still there a little bit, the pain, but I have to look
okay?
again.
Because if it is at all, you're gonna need to go in. We just have
Yeah.
to make sure because we don't want infection to set in
Okay.
because then it's going to just delay the breastfeeding process.
I
And
noticed
I
when I
mean,
pump on that side, it wasn't as much either. I'm like, whoa, what's going on? But
yeah.
as it usually is. But
Are you when you pumping? Is the milk coming flowing normally? Are you pumping
it's
from both?
yeah, I'm pumping from both. It's flowing, but the one with the that was hurting, it hurts, and the nipple was hurting. I told my husband, I was like, oh my god, this
'Cause the
hurts.
nipple shouldn't be hurting because you're
Oh
pumping.
really?
Yeah.
I looked it up and I was like, it's probably and I was gonna ask you, but I was like, it's probably too late to text her. I'm not going to. But it still hurts a little bit, but it's a little bit better. But I said I'm gonna watch it because I was reading that it may have to have antibiotics or something.
Yeah,
But
antibiotics will clear it right up. But it we don't want you to have the pain because then that's not going to make you not want to pump on that side, right?
okay,
So
yeah,
it's something that we want to try to treat right away rather than wait because then, it's just going to delay things,
okay.
right?
Mhm.
So you should probably call the pediatrician or call your physician and get it going.
Who do I see my primary here
Your
or
your
OB for
primary, your
that? Okay,
primary.
okay, okay.
Your
All right,
primary.
yeah.
I would
So
I would do that sooner than later, just so
Okay.
that, just to make sure, even if you can't go in, the nurse can assess what is going on over the phone. And if
Okay.
they don't, let me know because I'm ready to pull up. Okay.
Okay.
Right away. Okay, we're gonna assess this mama because you have been doing so well, and I'm just so proud of you for continuously breastfeeding while your baby was in NICU. As your baby comes home, we don't want to disrupt this. We don't want anything to disturb that. Okay,
My goal is
so
12 months,
yeah,
so I'm like, I'm doing it
yes,
in 12 months at least.
let's go, let's go,
So
let's
I got
go.
like 10 more months.
I
So
love it.
yeah,
You can do it. You can do it, mama. You can do
thank
it.
you.
All right. Call me. I don't care what time it is. I told you that already. Whatever time it is, I don't care. Okay.
All right.
All right. All
All
right. Love
right.
you guys. And I thank y'all for being here with us. I thank you, Kiki, once again for delivering this information. You know how important this is to me, and most especially for our people. Okay. I know that even though some of them couldn't be here tonight, they're going to come back and they're going to, look at this
Yes,
information after
definitely.
the
And you
fact.
guys share
Yes.
if you can't get the
Please
information,
share it.
share to somebody who can. You know. All
Yes.
right. All
All right,
right.
guys. So I'm gonna let y'all go because I gotta go too. And thank you all for being here with us. I appreciate you.
Yes, thank you. Looking forward to speaking with you guys. All
Yes,
right.
please. I'm gonna let you guys know, besides the form, how to get in contact with Kiki.
Yes,
Okay?
I'll my site best way. Okay.
Yes.
All
Bye,
right.
guys. Take
Bye.
care. Bye bye.